been very orienting for us is something that Brian Armstrong shared on one of the past earning calls, which is that, Coinbase's point of view is that, and I believe this is right, I can't remember the exact, it was like in the next 5 years, they believe, about 10% of global GDP is coming on chain. And if you think about how big of a number that is, it's orders of magnitude larger than we are now. And we know kind of the case for why this happens, right? DeFi is better, right? You can provide institutional level scale products, services. They can be real time, they can be instant, they can be always on, they can distribute globally to everybody in totally permissionless ways. But if that's sort of the bet, right, that the space is going to grow by orders of magnitude, and that much of GDP is coming on chain, that means everything's coming on chain. That means things like global FX is coming on chain. That means real world assets are coming on chain. That means we're going to see a whole bunch of new, interesting primitives and products that begin on chain and then are distributed outwards to the world. And when you think about, the two verticals in which I think like Luke and I sit, right, of the exchange level infrastructure of this new on-chain economy that is servicing, 10% of global GDP, sort of lending, borrowing aspect of it. These are two core verticals of the on-chain economy and really essential rails, right? This is essential infrastructure for this economy.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. In today's video, we're going to be diving into exactly what this gentleman, Alex Cutler from the leading decks on Base Aerodrome Fi, mentioned in this particular video breakdown: lending and borrowing, and how they are two core verticals of the on-chain economy. He discussed and talked about real institutional yield and how institutions are for a fact about to onboard into the DeFi ecosystem, primarily because it's better. And I'm going to show you guys live examples of updated fundamentals on how that is happening in the now. So hopefully you guys enjoyed today's video breakdown, and hopefully today's video breakdown starts some form of a mindset shift within you to go from this hodl mindset, and that's the only way to accumulate wealth in this new digital asset ecosystem, to maybe even hodl and earn. The hodl and earn mindset, the hodl and put your digital assets to work mindset is going to take people so much farther in this digital landscape. So with that being said, starting off here, now that you guys have heard that gentleman say that lending and borrowing, keep in mind, Aerodrome is the leading DEX on the Base ecosystem, coming directly from a gentleman from that protocol saying that lending and borrowing are two core verticals. This leads me here to this post where an individual on X said, "Is anyone else wondering why XRP crashed? First of all, if you don't understand the fundamental landscape in asset class in which you financially involve yourself with, you need to start to study. You need to join a community of like-minded individuals like the one that we have created here for you guys at CYPRX that goes over the fundamental backdrop, so you understand why the market is bleeding today, why the market's down hundreds of billions of dollars, and why XRP's price is not at $50 like all the moon boys were telling you all, right? Besides the point, why do retail traders lose? Because while they chase price targets, the 1% are accumulating assets and mastering the new financial ecosystem. They're using crypto as collateral, lending and borrowing instead of selling, earning yield, running looping strategies, staking, liquid staking, providing liquidity. Large whales don't want to sell their crypto, and now they don't have to. We're going to get into some ongoing fundamentals that are going to show you guys exactly that. They're right now in the process of building and compounding strategies while retail traders sit on the sidelines waiting for high prices and call DeFi a scam. The truth, however, is that many will get burnt this cycle because they are focused on the wrong game. We are entering into an era of finance where it's almost impossible to go broke if you know how to put your assets to work. So why are so many ignoring the very strategies that institutions and whales are quietly doubling down on? While prices are currently cooling, it's not time to panic or chase noise. It is time to prepare. Now is the moment to learn strategies that the top 1% are already in the process of using and learning how to expand your digital wealth through lending and borrowing, how to earn yield and compound returns, and how to use crypto as collateral instead of selling it. The market always rewards those who prepare in the fearful moments. The next wave of the wealth transfer will not go to those just waiting on price appreciation and targets. Most individuals that sell their XRP for fiat will likely go broke. Real wealth will go to those who understand how to make their assets work for them. Now, don't take that from me. We're going to dive into some panel discussions and some video clips from some of the largest industry experts in the game. Today, we're going to listen to Sid Powell. He is the CEO of Maple. What is Maple? Maple Finance operates as a decentralized lending protocol and an on chain credit market for institutional borrowers, acting as an intermediary that connects lenders seeking yield with borrowers needing capital to grow their business. It provides institutional quality, over collateralized loans and pools funds for yield generation through a network of reputable pool delegates and cover providers who manage risk and contribute first loss capital. So it would behoove you guys to listen to what this gentleman has to say, considering that right now, Maple Finance has over $3 billion in TVL. So, with that being said, back to kind of what the dude from Aerodrome said, how lending and borrowing are going to be two core verticals in this on chain economy. After posting this to you guys, where I talked about lending out your XRP on loan protocol and earning 0.76%, it's so crazy to me how many people fixated on the yield that you're getting in terms of APY instead of the ability that you have to never have to sell your XRP, borrow against it to pay yourself if you want to buy something like a house, buy yourself something like a car, pay for everyday expenses, so on and so forth. So I wrote this out, and this aligns perfectly with what this gentleman Sid here, the CEO of Maple, is going to say to you guys here in just a second. Reading this out loud, it says, XRP holders, listen up. People who keep saying that the yield is too small, you are missing the point. It is not about chasing crazy yields. It is about adopting the same wealth strategies that the elites have used for decades, using your assets as collateral instead of selling them. And now, as retail investors, we can do this with a mobile phone and an internet connection. Take a second and listen to what this gentleman here has to say.
So we do, a high net worth might have held Bitcoin for a long period of time, and now they want to retain the upside exposure to Bitcoin. They don't want to incur a huge tax bill by selling it, and they want to purchase a house for their family. So we can do anything from those types of loans to a large Bitcoin miner, wants to borrow to purchase either more equipment or fund OpEx. So we'll lend to them. We lend to exchanges. So we do cover a large range of corporate and institutional clients. But what we've done is we've kind of, I don't want to say pioneered, but we focused on this niche area of private credit, which over time we think is going to scale to hundreds of billions of dollars. It's worth noting there's only about $20 billion worth of lending against Bitcoin today. And we think that if Bitcoin doubles from here, you could easily see that go to 200 billion over the next couple of years. And we think institutions who love private credit are really going to love this asset class. I wholeheartedly agree with you on never wanting to sell Bitcoin. And I think, just to elaborate on that, the play that, the very wealthy did over the last few decades was you hold your assets. You want to hold financial assets because as the dollar has been continually deprecated and depreciated, that pushes up the price of financial assets. One way inflation manifests itself is that the price of Apple stock goes up, right? Because a dollar is now worth less than it was before, which means the price of everything has to go up, including financial assets. So the very wealthy don't denominate their wealth in dollars, as in they don't keep it in cash in the bank. They keep it in financial assets or real assets, which appreciate.
So I just wanted you all to hear this gentleman discuss and talk about the same exact thing that we have discussed in previous posts. Shout out to the Crypto News Spotlight, by the way, for this interview. But back to this, where I said stocks and equities as an example. Wealthy investors don't sell their Apple, Tesla, or Amazon stock when they need cash. Instead, they use security-backed loans, also called margin loans or portfolio credit lines. They pledge their stock portfolio as collateral and they borrow cash at low interest rates. This way, they keep ownership of the stock, enjoy dividends, and capture long-term growth while still having liquidity. They do the same thing with real estate and other assets like arts and bonds. Ideally, the big idea here is that the elite strategy has always been acquire appreciating assets, borrow against those assets for liquidity, let the assets keep compounding in value, use loans, often at low rates, to live, invest, and grow wealth without triggering taxes or losing upside potential. So again, think about this. You have $20,000 in XRP, just as an example, and life throws a curveball as a $10,000 expense upon you. The old system would have forced you to sell your XRP, get stuck back in fiat, and miss out on future upside. The new system, however, allows you to borrow against your XRP, get the cash that you need, and still keep your XRP working for you. The small yield that you earn is just extra collateral. The real power is staying in Web3 and keeping your assets intact and never going broke by being forced to sell for fiat. This is how true wealth is built, not for flipping for fiat, by leveraging assets like the financial elites have done for the longest time. And now, this is happening in real time. So if you guys remember, over a month ago, I played a video breakdown of Christine Moy from Apollo Asset Management saying that she is starting to learn about looping strategy.
You know, a lot of my job is actually thinking about what does the future look like and how does Apollo win in that future? How do we take opportunities in the change and how do we make sure that we don't get disrupted? And what's clear to me, and it should be clear to all of you, is that the next generation of investor is very different and from an expectations and activity perspective than current set of investors, right? Like clearly, especially in like the crypto native set, like not only do you want to invest and have yield, you want to interact with your investments. You want to, I guess I've been learning about looping and vaulting and like swapping, right? Like you want to get active. And so from my perspective,
Christine Moy openly admitting on stage that she's learning about looping. Well, what was just recently announced? Aave's Horizon platform powering institutional DeFi via real-world asset lending and borrowing. This is absolutely monumental.
Moves in the space, and I'm starting it off with Aave. Okay, they are the biggest lenders. Is it Aave? I don't know. You tell me. But they are, I believe, is it the 38th? You can check aaverank.com. I'm looking at it right now, and jump to Aave. It is 38. That's right, the 38th biggest bank, FDIC insured bank by assets, if you include it as a bank. That's huge, Kyle. And they are getting into RWAs. It's something that I think we've talked about on the show, if not many times privately. But Aave, to me, Aave is going to be a RWA company. So it's going to be completely, now it's already at number 38. It might jump to number 10 or more thanks to RWAs. And I think they know that over there. We've seen Stanley on the road show for RWAs here and there. And now we see it coming together with Horizon. So Horizon is a platform where institutions can go and actually borrow against their real world assets. They can get a number of different stable coins they can choose from to borrow against a variety of institutional assets, from securitized, from superstate, from centrifuge, from a variety of different, grade A RWA issuers that institutions are comfortable with. So this is a very big deal to me, Kyle, because this is, of course, one of those use cases that I've been talking about all year. The fact that people can start borrowing against their assets, start looping them, and actually start finding real utility out of their RWAs. One day you might actually be able to use RWAs to stake and borrow against other opportunities. It's all kinds of cool innovations that are going to come from this, I think. And they're starting institutional, which means it's going to be big checks. Kyle, what do you think?
Yeah, this is tremendous. Look, this is a great example of DeFi really becoming a institutionally respected stack of services. I think that this is something that maybe would have sounded crazy as when Av launched, back in, at least into the mainstream in that 2020, 2019, 2021, that type of time period when we were covering the DeFi summer. And now we're seeing it generate real liquidity, acting as a real distribution channel for these banks and institutions in a way that they hadn't previously accessed, right now.
Creating a real distribution channel for these financial institutions and banks. And if we come over here to a recent piece, I said here on this post, institutions aren't just curious about DeFi anymore, they're actively signaling what they want. Martin Quenzel, the co-founder of Centrifuge, confirms it. He directly says, "We are already seeing strong client demand for looping strategies where they borrow against real-world assets to reinvest and boost active yields. This is huge. It shows how institutional players are looking beyond simple exposure. They want tokenized real-world assets that they can leverage. They want to borrow, reinvest, and compound those yields, the exact same wealth building strategies that the elites have used for decades with stocks and bonds. And Aave Horizon is now stepping up to make the infrastructure possible. With deep liquidity and high quality tokenized assets, DeFi yields can finally compete head to head with traditional markets. The message is clear. Taking a look at this post from Block Stories, after Aave having launched Horizon, it says here, Aave Horizon is the acceleration mechanism for institutional DeFi lending. Then right here, this is where the gentleman from Centrifuge goes on to mention that financial institutions are interested in looping strategies. Martin Quenzel directly says, ultimately, products like these will fuel demand for high quality tokenized assets and bring deeper liquidity. We're already seeing strong client demand for looping strategies where they borrow against real-world assets and reinvest and boost effective yields. This additional utility can make DeFi yields more competitive than TradFi yields and attract a broader set of institutional investors on-chain. If we come over here to a recent Medium announcement, this is from just 7 hours ago involving the institutional DeFi layer Centaura, and it says, Aave is one of the iconic brands in DeFi and a team that is always pushing the boundaries of the space. The latest addition to the Aave family is Aave Horizon, a platform that bridges the gap between DeFi and real-world assets with a very simple use case, enabling the borrowing of stablecoins using real-world assets as collateral. Then if we come all the way down here to just finish this off, it says, at Centaura, we believe the intersection of real-world assets and institutional DeFi is one of the biggest opportunities in digital assets. Aave Horizon unlocks what we consider the most important use case at that intersection. Centaura's institutional DeFi capabilities are well aligned with Horizon's vision, and we are excited to partner with Aave on this journey. So you have this organization that is aligned with institutions, and they are directly telling you guys that they believe that DeFi is one of the biggest opportunities in the digital asset ecosystem, yet most people, again, ignore DeFi opportunities to generate passive income on their digital assets. It will behoove you guys not to ignore this shift. If you all remember on stage just a few weeks ago at the Real World Asset Summit, Aave was sitting next to an individual representative from Inversion, and Stani went on to predict a $100 trillion market cap by 2029, which I personally think is a little outrageous, but possible to say the least. At the end of the day, nobody has a crystal ball. Regardless, the gentleman sitting next to him talks about how there's monumental amounts of capital sitting in trapped countries that will want to generate yield.
Your hands. Same question that I asked the audience. By which year will we hit 1 trillion in RWAs? Just a number.
100 trillion?
1 trillion.
Come on, let's do 100 trillion.
Let's do 100. Okay. So that's about 20% of all global assets.
Yeah, I'm bullish.
Okay.
Yeah.
Which year?
2029.
For 100 trillion. Okay. That's
I mean, we need to work hard. You need to go there and get some assets on chain.
Yeah.
We'll bring the first billion users, and we're not looking to acquire small businesses. So I think it's incumbent upon us as an industry, but I think the opportunity is there. But I think anything I've learned as an anecdote, when we first invested in Lend, it was a sub 10 million market cap project, but it was working. The smart contracts were there. Not even in my wildest upside case did I imagine having how much CBL do you have today?
We have 43 billion net deposits.
How much?
43 billion.
40 billion.
About, yeah.
40 billion. Okay. I think we were in our best case scenario, that would have been if this gets to $1 billion, this would be amazing. And then it did that. And I think it's just important. Crypto sits on top of the distribution of the internet. And so don't be surprised when you graduate the financial rails from a system that predates the internet to a totally digital borderless financial system. There are monumental amounts of money sitting in trapped countries that want to seek yield. And that's just I'll leave you with that. I think it happens in the next 5 years for sure.
So think about that. Not only will you have financial institutions that will want to generate yield on their idle digital assets and capital, but you will also have whole entire governmental entities, jurisdictions, and countries that will want to do the same exact thing. Yet you have the mindset of the average retail investor is just buy low and sell high and think that that's how they're going to survive in this new digital economy moving forward, when that is the farthest thing from the case. But I encourage you guys to go out there and start to learn about how to utilize your digital assets as collateral, lending, borrowing, staking, liquid staking, yield farming, so on and so forth, putting your digital assets to work. If you guys want a safe place to learn how to do so, you guys can head over to CYPRXtrading.com. You can tap into the Wealth 28 Club and you can watch hundreds of video breakdowns on how we are getting our digital assets to work for us and generate us passive income in the now, so that way you don't have to go out there and risk your hard-earned digital assets. You can simply just watch us do it and learn. Many blessings to you all, as always, bringing you all some of the realest information in the game. Do not fade your education in the DeFi ecosystem to learn how to generate passive revenue with your digital assets. As always, be cognizant, be aware out there. I cannot stress enough that now is the time for education, and I'll see you guys in the next video breakdown.